sequels. I've always joked about how, sequels are always bad. Well, this rerun or sequel to the 1970s in the 2020s is going to be worse. I mean, this is going to be the opposite, of the roaring 20s of the last decade. The 20s was a big boom time in the 1900s, right? 1920, of course, it ended with a disaster with the crash of 29. And so the 30s ushered in the Depression. But right now, I think we're going to have a combination, really, of the 1930s and the 1970s. We can have the worst of both worlds, and that's what we can look forward to. So hopefully we have a happy New Year's, but knowing that we've got all of these problems on the horizon. And I want to talk about inflation because today was a big week with inflation data. But I think the more important aspect of, the inflation data was how few people seem to comprehend what it means. I mean, most of the talk that I hear by the talking heads on, the financial media is that everything is great, right? That the inflation threat is pretty much behind us. Yeah, there's a little, few more bumps in the road, but we're on the road to 2%, no problem. We'll be there. The Fed's going to be cutting interest rates by next year, so these high rates are not really a problem. It's just a temporary nuisance until we get back to low rates. That's what everybody expects. I mean, I heard this guy, I was watching on CNBC, and this guy is proclaiming that, inflation has topped out and it's coming down. How can he say that when if you actually look at what's happening, it's the reverse? Inflation has bottomed up and is now rising. The opposite of what he said. Look, we had a long run of low inflation, at least the way the government measures it. Not the way, people live it, but the way the government measures it with their flawed CPI. We had better than a decade where CPI was below 2% average. I mean, we had a couple of years where it was above it, but we had several years where it was below. But the average was under 2%. And that all changed in 2021. 2021 was the breakout year for inflation because the way the government reported it, inflation was 4.7% in 2021. That was a big jump, more than double what it had averaged, not only above 2, but above 4. And then in 2022, it got worse because the inflation rate in 2022 was 8%. So if you think of inflation like a stock, this was a massive breakout. You had a 10-year consolidation kind of below this 2% resistance. And now it's a massive breakout above 2%. Now, 2022 looks like it's going to be a bit of a pullback. It's not going to be as bad. 2023, this year, is a pullback year. It's not going to be as bad as 2022, right? We're going to pull back towards the breakout. We're not going to get anywhere near 2% for the year. Maybe we'll get down to 4 or 5%, something like that. But what we're really doing is kind of retesting the prior resistance. So if you were a trader, you would want to buy inflation, right? Inflation looks very bullish on a chart. It broke out, and now you got a little bit of a pullback, and it's an opportunity to buy the pullback following the breakout because all the evidence is that inflation is headed a lot higher. And before I get to the official numbers, let's look at what happened again in the oil price. I'm looking at the price of oil. I think it's settled for the day, although maybe they're going to adjust it. But we closed the week above $90 a barrel, $90.34. But this is the highest oil prices have been now of this new bull market. Oil is up another 3% on the week. This is 1 week. And if you just go to the beginning of September, the inflation numbers that we got were from August, and I'm going to get to those. But since then, in September, oil is up another 8%. And the month is like half over, and we're up 8%. And there's no real resistance. We're headed for 100, certainly before the end of this calendar year. And by next year, we could hit a record high. We could get back up to $150 a barrel for the price of oil. But oil keeps going up. The other thing that keeps going up are interest rates. Bond yields continue to rise relentlessly. Oil prices, bond yields keep going up in tandem. Now, if you understand the U.S. economy, what are two important aspects of our economy? Well, we have a lot of debt, right? Everybody has debt. The national debt is not quite 33 trillion. I keep watching it. It's 32.97-ish. So maybe it's going to hit 33 trillion by the next time I do a podcast. But the government has a lot of debt. Corporations, consumers, everybody is loaded up with debt. And everybody has to pay interest on that debt. Well, interest rates keep going up. A lot of this debt matures, has to be rolled over. These prices are going to affect the consumer price index. Interest is built in there, and Americans are going to have to deal with it even just directly as they service their debts. America uses a lot of energy. We're not exactly very energy efficient. We drive a lot of gas guzzling SUVs. A lot of Americans don't necessarily have energy efficient homes. A lot of people bought these McMansions and they have a lot of square footage now that they need to heat or air condition. So we use a lot of energy. And in fact, we use more energy than people realize, because a lot of people look at the fact that, maybe we don't need as much gas in manufacturing or energy as we did, in the 70s, for example. But that's because a lot of the stuff that we import, we used to make ourselves back in the 70s. So we consumed a lot more domestically made automobiles and other manufactured goods. And so the companies that made those goods, they consumed the energy to produce them. But if we're importing an automobile that was made, in Germany or Japan, the energy to produce those goods was used by those companies. So it doesn't really show up here as energy, but it shows up in the price of our imports. And so those import prices are going to go up, because the countries producing them need more energy to make the stuff, but also now they have to ship the stuff all the way over here. And so there's a lot of energy that goes into shipping, transporting, not only getting all the stuff, from Europe and China, and now it's on the coast, right? It's on the West Coast or the East Coast, but now how do you get it to the middle of the country? You got to load all that stuff up on trucks. Well, what makes the trucks go? Well, they need gas there. So it's all this transportation that we have that we didn't have as much back then when the factories were closer to the end user. So we need a lot of energy. We have a lot of debt. What's the worst thing that can happen? Interest rates go up and energy prices go up, and they're both happening at the same time. So it's obvious to anybody who opens their eyes that inflation is not topped out and coming down.